I actually feel a little more comfortable. I like bad news.
Are we sort of building too many red flags, or what's the story?
Not a bubble at all. I can tell you the difference is in a bubble, and I was in the last one.
Right.
I don't think we're in a bubble.
We had been pulling out of China. We started last November, actually, after the debacle around the Ant Group IPO and really the banishment, it seems, of Jack Ma. And we saw increasing signs that the government was going to get tough on companies. We didn't know and companies which were more than unicorns. They had exploded onto the scene, and they had become so powerful, as had their leaders, that they almost seemed to be threatening the government. At least that seemed to be our take on the government's response. So we were a bit cautious, pulled away, and in fact, our flagship fund has moved out of most Chinese stocks. I think we were out probably late April, late May, somewhere around there. It might have been a little bit later. Gradually, you never know 100% of the time. I think the online education, really nationalization there, was a real valuation killer for the market. So I think that the market's going to be under pressure from a valuation point of view for a long time now, because that sort of thing was so unexpected. Even from those of us who saw the government tightening its grip on the country. But what we have done, we did after this last bloodbath in the stocks, we did try and sort through, okay, which companies are doing things the government likes.
Right.
And what we're seeing are those that are catering to tier 3, tier 4 cities, logistics, groceries. So you've seen us buy JD.com. JD Logistics is a big part of JD.com. I think they own 70% of it. So that's probably been our biggest purchase, as well as some Pinduoduo for the same reason. But if you were to look at what we were doing in those portfolios, we were really swapping them out of other names that we think are going to be continue to be in harm's way, or certainly under government pressure, like the Alibabas, for example. Well, if you think about what China is doing, they're doing many of the same things our own government and other governments around the world are doing. Most governments are concerned about data privacy, national security, and even concerned in some ways about the impact of social media on students and so forth. So, but we just haven't. We don't have the kind of centrally controlled government that can, wipe those activities and risks off the face of the earth as much as possible. That's just not who we are. We do know that China wants to be number one in the world. And economically, certainly. And one of the ways they want to do it is with innovation, with technology. They want to bring more of it back into their country, certainly the manufacturing side, semiconductors being one of the most important areas in which they're investing. They haven't gotten it right. I've watched them invest in semiconductors since the early 90s.
Right.
And where they brought in a lot of Taiwan semiconductor talent, and they just haven't been able to crack the code. One of the things we've been learning is, as Chinese citizens have gone out into the rest of the world, they've actually come back many times when they come to New York City or other places in the world where the infrastructure is in need of an overhaul, they'll go back to their country and say, hey, we have it pretty good here. I've heard that from a number of younger people. And so I think China has been able to stir up a little bit more of a nationalistic, hey, we have it kind of good here. And at the same time, there is the risk of social unrest because of the rich and the not so rich, or the outright poor. So they are definitely focused on that. The last thing, the biggest risk China would have on its hands, I think, is a revolution, and it could be around that. I think that's why it's stepped on this kind of mega cap stock as aggressively as it has. It realized it had just mushroomed, gotten out of control, certainly government control, and now they're coming back in to exert a little control.
So more pessimistic about China long term, or more optimistic?
I'm more optimistic.
Okay.
I'm going to turn it around a little bit. I'm not pessimistic about China longer run, because I think, they're a very entrepreneurial society. Sure, the government is putting more rules and regulations in, but I don't think the government wants to stop growth. We are looking for autonomous plays, and autonomous trucking holds incredible promise. We believe that autonomous trucking will be able to deliver freight less expensively than rail does now. Now, if you think about it, human-driven trucks, transporting freight by human-driven trucks costs 12 cents per ton mile. That's not the way a lot of people measure it, but we think it levels the playing field. Rail is 4 cents per ton mile. And we believe autonomous trucks will be 3 cents per ton mile. So we believe that half of the freight in the United States that is delivered by rail today has an opportunity to shift over to autonomous trucks in the future. It's a huge opportunity. Let's see, some of the SPAC names that we're getting into areas within the genomic revolution. First, very importantly, into proteomics, a huge new field. We've been spending a lot of research dollars on DNA and RNA, but RNA is really the messaging for proteins, which actually are the earliest, where we see the earliest manifestation of disease. So it's going to be a huge new space. And so some of the names you see coming into the portfolios are those, especially in reading many of the articles about it, is that there are not many people who are deeply involved with artificial intelligence, and that is who that day was for. They were trying to attract AI talent to tackle the most difficult and probably most transformational opportunities, certainly in terms of transportation, all kinds of transportation, not just cars and trucks, but ultimately drones and planes, using artificial intelligence. So I think the press took away, gee, this was a nothing. It was kind of entertainment with this robot, but there they go, changing the subject again. If anyone who has been steeped in AI and wants to take up the challenge that they're offering, got a tremendous perspective on how far ahead Tesla is relative to almost anyone else. I would say Google is up there, but in many ways in autonomous transportation, Tesla is in the lead. We believe they have the pole position and we've increased our estimate here. In the next 10 years, we think the autonomous taxi network opportunity in the U.S. will be 11 to 10 trillion dollars from nothing today. Think about that.
It's huge. It's
11
massive.
to our economy. Now, it's not just this economy. That 11 to 12 is a global opportunity, but just to give you a sense of the size of that opportunity, our economy is 21, 22 trillion dollars. This opportunity alone is 12 trillion in 10 years. The market will start to recognize it, and we think we will in the marketplace in the middle of this decade, 2025. The market caps will probably be scaling towards the $3 to $5 trillion range. Not a bubble at all. I can tell you the difference is in a bubble, and I was in the last one.
Right.
In that bubble, our strategy would have been cheered on. People would have been clamoring to get in. And sure, we've retained our assets beautifully, but the February drawdown from mid-February to mid-May was quite a big one. It was for our flagship fund, roughly 35%.
Mm-hmm.
I'm very happy that happened because we've tested our retention here. Our clients really know what they own. And we've set the stage for the next leg up. We have a lot of fear in the market. You hear more analysts. If you look at the ratings, buy and sell, you can look at Tesla's ratings. They're probably even buy and sell by now. Maybe it's a little more to the sell side. In a bubble, it would be buy, 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 buy. You get a lot of fear from the street. And we get a lot of incoming questions associated with risk, which we should get and are happy to answer. We get more questions about risk than opportunity. In a bubble, you get more questions about opportunity than risk.